Hello and welcome to another episode of In the DeNovo. I'm your co-host Sarah Lennox, the Director of Operations and Growth here at DeNovo Treasury. Will and I are thrilled to welcome our guest and newest member of the DeNovo Treasury leadership team today.
Today we're joined by Diane Sherman, our CFO and Managing Director. And before we get to Diane's introduction, I just want to say how lucky we are to have Diane joining our team. Diane and I met through a professional network called Crew, and we had an opportunity to talk about what she wanted to do in the future. And we were talking about some synergies that we had where she could potentially come in and maybe talk about things that DeNovo had on the emerging front. And the conversations naturally evolved into a nice synergy that we had, really, Diane. And
We did.
it turned out that we found that you were just a natural fit just to come on in. And so we're really fortunate to have Diane and her great experiences you're going to learn about right now. So why don't you tell us a little about your background, and welcome to DeNovo Treasury.
Yeah, well, thank you, Will, and thank you, Sarah. I'm so excited to be a part of DeNovo Treasury. As Will mentioned, we met through a Crew, which was an amazing meetup. And yeah, the synergies were just there kind of naturally on day one. So my background is 25 years in banking, Merrill Lynch, Bank of America. I wore a treasury management hat more so from a front office perspective, managing balance sheet, liquidity, net interest income, and looking for opportunities to basically optimize the assets that we held. It seems very I guess transferable, you could say, in terms of sliding over to the community and credit union space, which I'm really excited to, kind of discover the products in that side as well, and how the liquidity management and some of the things that I built in my own space can transfer into community banks.
Yeah, and for those that know us well, we've focused on treasury management from a line of business perspective, really getting into the products and services that the clients offer, or that our financial institutions offer to businesses there. We saw a natural fit with what you do, and we're going to build a new line of business that we're calling Treasury Operations and Liquidity Management. So just want to set the table for that. And so Diane, why don't we talk about how your extensive background in client profitability at Bank of America, how the key metrics and strategies that you believe are most critical for banking clients today. Let's talk about that background and how that might work for community banks and so on.
Yeah, sounds great. For community banks today, I think client profitability kind of hinges on the data-driven metrics and capabilities to really kind of dig into client relationships and target strategies around how best to optimize client deposits and loan balances, and basically develop profitability models that may be in place today or just might need some tweaking or adjusting given like the markets that we are in today. So just some examples of that I feel are like, how do clients handle their excess cash on deposit? What products are available to a client to optimize and or maybe transfer that excess cash and the funds into interest earning products alongside their checking accounts or other business accounts that they may have with their local community bank today.
Yeah, and that's going to be a natural fit for DeNovo Treasury. Today, we would refer our clients to solutions that would help them with managing those things because we just didn't have the depth to have those kind of conversations. So bringing you on is going to be a real big win for us. And so thank you so much for joining the team.
Very
Sarah, I
exciting.
think you wanted to ask some questions about liquidity.
Yeah, the liquidity management stuff really kind of piques my interest, especially as I'm learning this industry firsthand for the first time since joining DeNovo Treasury. So my question for you, Diane, was how has liquidity management evolved during your 2 decades in banking, and what trends do you see shaping the industry's future?
Yeah, sure. Thanks, Sarah. Great question. I think a lot has changed, especially after some of the turmoil in the market over the last 20 years, some major events that have occurred. Basically, regulations have tightened a lot around banking and knowing your client, and also around liquidity management. Banks have pretty tight restrictions around, the safety of the client's funds and, just how they manage, any risk around the optimization of client funds. What I notice is basically speed of access to liquidity is huge. I think we're seeing that now in the tokenization space and the blockchain development, where clients want 24/7 access to mobilize funds, B2B, B2C, in many different directions. And I think that's something that, as a whole, the industry is like, pressing forward as, Genius Act has just come out, and various
Right.
changes around, what we can and cannot do within the banks. So I would say probably improvement on settlement speed and timing of wire movements.
If I could interject there real quick, um, at Bank of America, you probably had a lot of tools at your disposal to be able to handle these challenges.
We did.
Yes.
Given the size, yes,
I mean, you're multi-trillion dollar financial institution,
100%.
right?
Yes, yeah, yeah. Access to the technology and the partnerships obviously were there, and or even to build some of these in-house as well.
Yeah. So moving into the DeNovo Treasury, where we serve community banks and credit unions that sometimes have 50 employees. That's a very different animal that you're going to be working with, right?
Hmm.
And
Hmm.
so, how do you see helping them fill the gap with, what you did at $1 trillion financial institution, and
Yeah.
how do you see that translating now into what you can do to offer these community and financial institutions?
Yeah, sure. Great question, Will. I think the problems that the big banks have are probably problems across all banks, but you're
Sure.
completely right when you come to like the smaller size banks. My thought around that is being able to partner with the community banks and kind of hone in on their in-house like capabilities and really be more hands-on and help them either develop it from scratch or partner with vendors who may already provide some of the client profitability services. But my guess is that maybe there is a need for someone to take a look and really help them decipher like what products are most profitable versus another, where there be a gap in pricing. So I'm really excited about having more hands-on approach and actually being able to talk one-on-one with various team members around what those needs are. I think sometimes in the larger banks, you depend on your technology partners who, for the most part, a lot of it is plug and play, and you're basically signing up to a platform that may not have a lot of customization, not an ability to really maybe get the exact need that you might be looking for in your organization. Here, I feel like we'll be able to come in and really give you more of that on hands, like personalized need and assessment.
Yeah, I think you're going to find two things. You're going to find financial institutions that either know that they have these issues and don't have the bandwidth to solve them, or have a combination of both. They really don't know what it is that they should be looking for, or maybe have a combination of things that they do know and some that they don't, and don't have the bandwidth too.
That makes sense.
So this is going to be a great opportunity for you to go in and dig in and get your hands dirty, as they say.
Yes.
So might be a fun new adventure for you, I think.
Oh yeah, I'm
Given,
I'm like really
given,
excited about it.
yeah,
Yeah.
yeah, you can be certainly, it's going to be a time for you to, be inventive without having the technology tools necessarily at your disposal, right? That you did
Yes.
before.
Yeah.
So, but certainly some of the partnerships that DeNovo is creating is going to help you form some of those things.
Yeah,
So
and I always really enjoyed Will kind of just starting something from scratch. I'm one of
yeah,
those, building it from the ground up type of folks and really curious on, how the back end works. So really excited about it,
yeah,
yeah.
it's going to be good. It's going to be fun. Sorry, Sarah, I wanted to interject there. I had a couple other follow-ups, so
Yeah.
I think
No,
I think the
that's
next one's on
perfect.
you. Yeah,
Yeah, and I think that the way that this conversation has gone, that kind of answered one of the questions that I had already written down, and that was what is exciting you the most, Diane, about DeNovo Treasury's future, and what should our clients and stakeholders expect from this new division under your leadership? And you possibly might have covered that because, like you said, it's going to be a lot of hands-on activity and building things from scratch and getting really creative about the solutions that we can bring
Mhm.
to an institution that might not have some of those larger resources. So if there's
Yeah.
anything outside of that that you were thinking specifically around one of those
Mhm.
offerings, if you'd like to share what really has you the most excited, that would be great.
Yeah, sure, Sarah. Yeah, I think I'd probably just add the, fintechs and the partnerships with like some vendors who have, connectivity to core processors behind the scene. Even the AI aspect to client profitability. Just to add, I mean, I think that that's all going to kind of just continue to grow, and I'm excited to partner with some of those, those platforms and actually see where we can take client profitability and, optimization metrics and make them more user friendly, and, faster to market for, the community bank.
yeah. I think some of these tools are out there, but I don't necessarily believe that community financial institutions have as easy or quick access as we think. They're expensive. They do require technology to help integrate, and they don't have that level of sophistication necessarily to do that, or the time and money. They're worried about things about bringing in deposits
Hmm.
and just trying to survive and move up market.
Right.
And sometimes profitability and getting to those are secondary. It's kind of like as they evolve, it's kind of like, well, let's let's get there first, and then we'll look at client
Right.
profitability next. A lot of times they're giving away services just to get the deposits, just to get there, and they won't understand that they have a loser. And I sorry to use that term, but they have a relationship that is losing money, is what way
Hmm.
I should say that,
Hmm.
until it's sometimes too late. They've gotten into a long, maybe a 2 year
Right.
contract or something, and they realize that the rate that they've given on the deposits is not going to be made up by some of the fees that they've decided on from a treasury management perspective because they were eager, right? They wanted to bring in the deposits, and okay, well, there's not going to be enough runway on some of these fees to make up for that.
Exactly, Will, right? And I think that, as their client bases grow, the tools to be able to, on demand, really see that on a daily basis if possible, and like kind of roll that up to decision making and, you know, um, prospecting new clients. I think that's all going to be super helpful. And like you said, where they may want to move up market, all of that's going to be essential to make sure that they're, I guess, generating the right customer relationships, right?
Yeah, and it'd be good to be able to do that now while they're growing. It
Yeah,
doesn't
in
have to be
parallel.
something they do later, you know?
100%. I mean, this is something that should be done in parallel with any
Yeah.
thoughts around growth. So agree, and I'm hoping that, this will bring that, toolkit to them in terms of being able to see things holistically.
Yeah, they should be able to do both. Why do they have to choose?
Right,
Yeah.
exactly. Yeah.
Why
And
wait? The time is now.
what's that, Sarah?
Said, why wait? The time is
Yeah, why
now.
wait? Time
Right.
is
The time
now.
is now, right?
Yeah,
Yeah, and everything's moving so fast, just in technology and in banking that, I mean, community banks and, credit union space, they kind of deserve to have the same sort of level of, service and or access, right, to the same tools that some of the larger or mid-sized banks may have.
well, that's a good point. It also is a good segue into the next question, which is what role should emerging technologies play in treasury management and treasury operations, and how can we balance innovation with the security and compliance our clients expect? And I'm gonna ask a secondary question with that, or just maybe kind of pause and just state that, the complexity for community financial institutions is the cost associated with investing in compliance and risk resources. Because at the time, most of our clients probably have one or two people that
Right.
that are there. So as they invest, that's a big cost to invest in those things. So
Yeah.
what do you think?
Yeah, sure. I mean, I think that technology is really going to kind of set aside one community bank from another in terms of the customer experience, right? Customers want to, they want to have that at their fingertips sort of access to understanding the products that are offered, being able to evaluate the either cost for a product and or interest earned from a product. And I think that technology, especially with fintechs and being able to pull in customer information that can be accessible and interpreted easily, is really going to kind of set the community banks aside, and then also kind of put them at par times with like the mid-size and or some of the larger banks. Larger banks tend to provide a lot of transparency to clients in terms of, this is our platform, this is our offering, AI functionality for Q&A, questions back and forth without having to sometimes even call someone, and you're getting, on-site information through, an AI agent. And then also I think down the road, eventually, tokenization and digital assets are going to play a part. I know some of the larger banks are looking at that, like JP Morgan, and some of the bigger folks already have created where you can take a deposit and tokenize it, and rather than transact in fiat currency, now the movements are real time, milliseconds to move funds between business to business or business to consumer merchant activity. So I think technology is not going away. It's moving actually pretty quickly. And in terms of like the safety behind it, I mean, there's going to have to be, the know your client modules within the technology stack. There's going to have to be, AML, compliance checks. All of that will still need to be layered in because you want a trusted source of information, and let the clients know that, there's really no additional risk to the technology changes, and just make them comfortable and educate them on what that new platform will eventually look like.
So what do you think is necessary in order for a community bank to leverage some of those things?
Early,
That
yeah,
to compete with $1 trillion financial institution that's going to start implementing some of these technologies.
yeah. I mean, I think in my mind, there's access at every level, and to some great great partnerships, great resources, and I think what DeNovo I feel we bring is the first you're getting subject matter expert who came from a lot of these larger shops, but then also wanted to be hands-on and partner with the local community, and in that you also then get potential linkage to vendors who actually they're in the same markets that some of the larger banks tap into, but they may not be as accessible to the community and the credit union space, where we're kind of bridging that gap. And that's where I think like it's a full service approach of, hey, we come in, we help you build, and we find you the partners and or that are in your space and really want to work on the same initiatives that the larger banks work on. It's definitely in the market.
Yeah, and here's a shameless plug, right? When you
Yeah.
work with DeNovo Treasury, and you're talking to Will or you're talking to Diane about what your engagement is going to shape up to look like, we're the ones that deliver that.
Yes.
And
Yeah.
I think that's
We're
unique,
there with
right?
you.
And,
Yes.
we have to change some of our marketing now because we've always said that we have 35 years of experience. Well, you know, Now we've got,
over
I'm going to do
50.
the math wrong, but it's probably 60, right? Is that the number? Is that the right
Yeah,
number?
we're in that range, yes.
Yeah,
Probably
we're in
close
that
to that.
range, right?
Yeah,
Of what, and a lot of that's big bank experience between you and I.
it is, it is.
I didn't work at a $1 trillion bank, but I've certainly worked at the $1 billion banks,
Yeah,
right? So,
big banks, yeah,
uh,
and and it's all actually, we're all speaking the same language regardless of the
sure,
size, right? And
absolutely,
really,
yeah.
yeah, so,
Yeah. No, I had to compete against, Bank of America throughout my entire career at multi-billion-dollar banks, right?
yeah,
Super regionals, as we would call
yeah,
them, I
into the
guess.
regionals, yeah.
So, you know, as we were as we were talking about your entry into DeNovo Treasury, you've expressed a particular interest in stablecoin,
Yes,
and actually, we've recently got you plugged into the U.S. Faster Payments
that's very
Council
true, yeah.
and a work group there for the digital asset group, hopefully
Hmm.
to so that you can have some impact on that discussion in the industry.
Hmm.
But how do you see digital assets fitting into traditional treasury operations and what opportunities they present for our clients?
Yeah, I think that it's just something that's going to, at some point become probably the normal way that we transact, which is hard to probably believe, but in, I'll say 5 years from now, it's going to look very different to us all. But I think, understanding, first, education is huge, right? I think when people hear tokenization, it's a scary word, and it's like, what does that mean? I think a lot of it is coming into the communities and first maybe educating clients and or the banks on what do those rails look like, how different are they if you laid them side by side, how money moves today versus how it might move tomorrow. And I think when you pull out the, I'll say, fear factor out of it, you actually realize that it's just, and I don't want to say it's just a more simplistic way and with probably faster speed, right, is, to be able to, rather than actually settle cash movements, now they're moving through a blockchain or a ledger perspective, and, the securities are still there. The audit trail of the money movement is still on record. And I think for cross currency and cross border movements, that's also going to increase speed of settlement as well. And it's going to take away some operational risk too, right? Because right now, there's a lot of people who are hand holding and watching and monitoring movements of cash daily, right? That's some of Treasury operations role every day. I think that, eventually, as we learn more about ability to move to, assets through digitization, some of the operational risk may also go away as well.
Now, for someone who might be a novice with stablecoin, and I hear things like blockchain and journal or ledger, I think about Bitcoin.
Okay.
And I know that they're vastly different, but
Hmm.
maybe just a very quick Reader's Digest version on,
On blockchain.
from a Bitcoin and a stable coin. And I know, I'm saying there might be novices out there
Yeah.
pointing fingers who might not know that these are vastly different things,
Yeah.
Bitcoin, because
Hey, I'm
they
a
both
novice.
have a blockchain, they both work on a
Yes. Yeah.
ledger.
Yep.
That's similar, but
Right.
the function of them are different.
Yeah. I mean, how I think of a stable coin is more so where it is a digital version of a US dollar. So it is, backed by, you could say US treasuries or US treasury
So it's
bills.
already backed by a currency, whereas a
Right.
Bitcoin is a
Is its
currency.
own, that's how
Okay.
I think of
I
it.
think that's a very good definition then, or a differentiator, right?
Yes. Yeah.
Gotcha.
Yeah. So stablecoin is backed by currency, and
Right.
Bitcoin is a
Is
currency.
a currency.
Yeah,
Okay.
That's how I like
Fair
it.
enough. I think that's
that makes a
simple
lot of
enough.
In
sense.
layman's terms, yeah.
Makes a lot of sense.
Yeah.
So then when you're trying to when you're trying to use stablecoin, then you're trying to just then, rather than move a currency, you're trying to move it into stablecoin, which would move the currency faster.
Well, it would just be a representation of the
Rotation of the
currency.
currency.
Yeah, so
Yeah,
instead
okay.
of, the currency is actually moving from, I'll just call it bank to bank, it's just a representation of that movement on a blockchain or a
A
ledger.
blockchain.
Yes.
It feels and sounds a little bit like in the wire world, like chips, or not chips. I'm sorry, like Swift, a little
Swift.
bit,
Yeah.
where it's a messaging of,
Yes.
and then eventually the money moves, right? I might be exaggerating a little bit, but conceptually, maybe
Yeah,
it
at
would be
some,
great.
at some stage there would be some,
Yeah,
obviously money's behind backing the
sure,
stable coin. Yeah.
sure, and not there's monies in a sense backing a Swift, but really the Swift is just the message behind, hey,
Right.
we're good for this, and yes, okay, right
Right,
between
where
those
the
two.
blockchain is actually also kind of that message, locking in the transaction that just occurred is basically
Transaction itself.
irreversible and on the
Yeah,
blockchain.
got it. Very good. I think that's probably enough explanation on that. Thank you for
Yeah, I'm not, yeah.
expanding on it. I put you on the spot there.
No, no, this is all good. And I'm actually learning a lot as I go through this. I'm really loving this space.
Yeah,
Of kind of having the background in optimization. It's so cool to think that at some point it's not our traditional assets and it's more so like a tokenized version of what we're
yeah.
all used to. So,
Well, what's cool is that we have an expert here at DeNovo Treasury, and
well, thank
we
you.
probably should have a series
Yes,
of web talks with you doing that. So
yeah,
that's an idea.
that is a great idea.
Oh,
So
I'm already working on
I'm
some.
sure you are.
Sarah's all right.
Where do you see the greatest untapped potential for community financial institutions as you're coming into the space, especially as we think about what DeNovo Treasury has to offer, what you have to offer? Where do you think that untapped potential is?
Yeah, I do think it's kind of a combination of like, both sides of what DeNovo Treasury is great at, right? I think it's the, coming in and, looking at what you currently have in treasury management and then layering on top of that, okay, now we know what you have and we know where you want to go. Now, what's your liquidity profile look like, right? I think it's armoring the local community banks with, again, similar tools that some of the larger competitors have, right? And then adding a twist of the technology on top of it will definitely, I think, make community banks stand out amongst their own, like, amongst their peers.
Very good. Well, that was. Thank you so much. Those were great answers. I think we actually have something fun now that Sarah wants to do.
Okay.
I try to wrap our sessions up with something either silly or fun or a little bit more on a personal note.
Okay.
And the one thing that came to mind was actually last night because I was talking with my 6-year-old, and my 6-year-old has now developed an interest in money because he gets an allowance and he's very excited about
Very early.
getting coins. So he has a coin collection and his own little piggy bank. And he's very preoccupied with doing math for money for all the different toys and games and things that he
Great.
can buy. And so my husband and I, we've been trying to instill in him that money is not created out of thin air. And we try to break very abstract concepts to a child down into like a digestible format. And he's kind of getting the idea. One thing, though, that he hasn't completely formulated is exactly what it is mommy does for a living. For his dad, and I've probably mentioned this on previous episodes, but my husband is in the Army and he's a paratrooper, so he jumps out of planes for a living. And that's super cool to a 6-year-old boy. So he understands what dad does. He
Hmm.
has no idea what mommy does. He just sees me sitting at my computer screen all day. He probably thinks I play games. But I try to tell him what exactly marketing is, um, or just the mission of what our company does. And because he takes those visits, those little trips to the bank to deposit his allowance into his bank account, he kind of has an idea. So to break down what I do to my 6-year-old, I say that mommy helps banks grow. If you could sit down with a 6-year-old or at least a young person and try to put into simple terms exactly what it is your career is all about, what might you say to them?
Oh, wow. I have a hard time explaining that to adults. So,
Right.
yeah.
Right.
Um, I
I was
would,
asking you for a loan. Can you help me get a
Right.
loan?
yeah. I would probably say I look in the piggy bank, and I evaluate if there was a way that more monies could have been, more coins could have gone into the piggy bank with the amount of coins you started off with. So I look to say, like, how can we take the coins you have in your piggy bank and double them and make more coins from them, invest them, and without having to, you know, generate new coins,
Coins.
but the coins that you currently have, if that makes sense. So I try to optimize the piggy bank.
That's a pretty good explanation.
That's a really good explanation.
Yeah.
Yeah, without having to work more.
Yes,
How do you
exactly.
make
That's
those
the key.
coins
Without
grow
having to
without having
work
to work
more.
more, right?
Yes,
Right.
Without having to go find more coins, without having to
exactly.
get more people to give you coins.
Yeah,
Yeah, that's awesome. I
without
love
having
it.
to do any more chores.
Yeah,
Exactly, exactly.
without
That
having to
one
get
would
any more
resonate
piggy
for
bank.
sure.
Without having to get more piggy banks, you know?
Yes,
Or maybe
exactly.
you have to get more piggy banks to
We
hold more
may,
coins.
as we make more with the coins, we need another
Yeah.
piggy bank. Yeah.
So that, yeah, but not having to get a piggy bank from another person,
Exactly. Yeah, just
yeah, we
generate
Yeah,
want to
more.
your
grow
your
our own
piggy
piggy
bank dealer.
banks. Piggy bank
I
dealer.
love
We need
that. That
a,
was pretty good.
What
we
would a
need a
piggy bank
DeNovo
dealer
piggy
look
bank.
like?
Yeah.
That was a great answer, Diane. Thank you. And
Yeah.
thank you so much for joining us, joining our team.
Yeah, thank you for
It's such a pleasure to have you here. We're really excited about all the great things that you're going to do with us at DeNovo Treasury this year.
thank
And
you.
then, of course, a big thank you, as always, to our listeners. Links will be in the description down below if you want to learn more about DeNovo Treasury's current offerings. And we will see you on the next episode of In the